Coming up on Market to Market, USDA looks to curb billions of pounds of food thrown away each year for multiple benefits. And while the West burns, in Washington, a different inferno is building over how to extinguish budget battles sparked over wildfires. Those stories and market analysis with John Roach next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, September 18 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. It was another unchanged melody from the Federal Reserve this week as they left alone the rate banks charge each other on overnight loans. The Fed last raised interest rates in June of 2006. The decision to leave the near zero level in place was based on unsettled global situations, low inflation, and instability in financial markets. The Dow, S&P, and NASDAQ rallied briefly after the announcement by Janet Yellen before falling. The Fed news also piled on the U.S. dollar as the greenback dropped to its lowest level in 3 weeks. Americans turned to a little retail therapy as retail sales again ticked higher in August, this time up 0.2%. Clothing, cars, and dining out drove the splurge. However, the Consumer Price Index did decline 0.1%, fueled by a big drop in the cost of gasoline. When you strip out the volatile energy and food costs, the core inflation rate rose 0.1%. New home starts may have lost that lovin' feelin' as builders broke ground on fewer houses in August, a possible sign the market is leveling off after accelerating for much of the year. But the level is still above 1 million starts on an annual basis. And in many homes, the kitchen remains the centerpiece of activity. Now the items past due in your pantry and refrigerator will be the new battleground of a government campaign. Several food-related organizations joined the USDA and EPA in announcing the goal of a 50% reduction in food waste by the year 2030. USDA Secretary Tom Vilsack says the United States throws away 133 billion pounds of food every year, or 31% of the supply. USDA officials say a reduction in the discarded edibles by just 15% would save enough food to feed more than 25 million people every year. The USDA and EPA hope that by reducing the amount of food we throw away, improvements will be made to the overall food security of the nation and will benefit the environment. According to the EPA, each year 30 million tons of unwanted fruits, vegetables, and other items are disposed of in landfills. As that food decomposes, methane is produced, which is a leading greenhouse gas emission. The standards reduction introduced this week was grown from a program started in 2013. Designed as an idea exchange, the U.S. Food Waste Challenge invited all facets of the food industry to share their best practices for recycling, recovering, and reducing the unwanted surplus. The 4,000 partnerships, from charitable and faith-based organizations to food processors and farmers, share their best practices for confronting the problem. Those ideas are then passed along to others in the food industry with the goal of getting the excess to those in need. Other resources to help meet these first-time goals include educational tools at the USDA website and a social media app. Those resources help consumers learn how to store food more safely and better understand food labels, which can be misleading when trying to discern between sell by and use by. Along with these initiatives, the USDA and EPA are encouraging the private food service companies, such as grocery stores and food manufacturers, to implement their own food waste reduction goals. With help from every corner of the foodstuffs industry, government leaders hope that in 15 years to have reduced the amount of food going to waste in the U.S. by 65 billion pounds, with the end goal of providing more chances to solve food insecurities for those in need. California was in the political spotlight this week as Republicans running for president debated at the Ronald Reagan Presidential Library. Vice President Joe Biden also made a trip to the Golden State, but his mission was to talk climate. Biden touted the state's solar technology and railed against those who deny climate change. World leaders are working to finish a global climate treaty by December. Biden stopped in Los Angeles to address the U.S. and China Climate Leaders Summit, where the world's two largest polluters aim to pressure other countries to follow their lead and cap or curb emissions. A few hours north, politics are also a part of the state's effort to battle the largest wildfire season in more than a decade. Josh Bittner explains.
It's not a pretty picture. There'll be a lot of heartbreak for the folks who live out here. Just an indication of a very bad fire season, and it's just a lot of destruction.
According to statistics from the National Interagency Fire Center, 2015's fire season is one of the worst in recent memory. And while several western states have fallen prey to the combustible nature of prolonged drought, California is the current hotspot.
Drought conditions have been really harsh. We're just asking people to be prepared. Even though the weather's favorable today, we're expecting it to warm out, dry up here later on in the week. So we're not out of the woods yet. We really ask public to maintain that defensible space, 100 feet clearance.
A bevy of blazes have wreaked havoc on the Golden State, with a fierce pair of infernos headlining the wave of destruction.
Oh my God! Oh.
The Butte Fire in the Sierra Nevada foothills outside Sacramento has scorched over 70,000 acres, taking over 350 homes and 2 lives with it. By early Friday, the fire was 60% contained, but still threatened more than 6,000 structures. Firefighters north of the Bay Area in Lake and Napa counties have begun beating the Valley Fire into a semblance of submission. Now 35% contained, 5 people have died, 114 square miles have been charred, and over 600 homes have gone up in flames, first sparked last weekend. The 2 major fires have so far displaced roughly 23,000 people.
By then it was dark, pitch black, dark, flashlight. Sheriff's telling us we had to leave and stuff. And there's all we could do is get 3 horses, 3 dogs, and us and get out of there. That was it. We're done.
Some Gold Rush country evacuees found refuge with 4-legged friends. Larry Fleming wasn't able to round up all of his goats and chickens, but so far his house and the rest of his animals have escaped harm.
You want to take care of your animals. You don't want to see them go up, and so you got to do what you got to do to help them, just like you're trying to help anybody else.
While nearly 14,000 firefighters battle California's seared landscape, the Obama administration warned Washington lawmakers again this week that current fire funding mechanisms are unsustainable. Unlike tornadoes or hurricanes, wildfire spending must stay within existing budget constraints and divert money from other programs to cover costs. In a letter to Congress, Agriculture Secretary Tom Vilsack revealed the Forestry Service will have to transfer $250 million to battle the current blazes, raising fiscal year emergency spending to $700 million. USDA FS burned through its 12-month wildfire allocation early in what's become a repetitive trend. The agency now spends over half its budget on fire suppression and predicts 2/3 of its expenses will accrue similarly within a decade. The shortage means less money spent for prevention, resulting in more dollars lost on future fires. House Committee Natural Resources Chairman Rob Bishop took issue with the Obama administration, pointing to bipartisan House legislation passed in July that would loosen fire-related fiscal constraints. Bishop said the money was only a small part of a serious land management crisis, adding, "Our national forests are unhealthy, overgrown, and highly susceptible to insects, disease, and devastating wildfire. We have 60 million acres at high risk to catastrophic wildfire. We need to treat these forests immediately."
So what we have here is, it's a piece of land that's owned by the Kern County. And they've done a thinning project through here to do a lot of the same thing that we need to do on the forest. Remove a lot of the ladder fuels and the surface fuels and some of the brush so that these trees have more resources, more water, more nutrients, and they grow stronger and healthier. Makes them more resilient to any drought effects, more resilient to bark beetle or any other pathogen.
Elsewhere in California, proactive Forestry Service personnel point to county conservation projects that already implement management tactics which mitigate fire triggers.
The adults came in, started a gallery where they laid eggs, and here's 2 adult beetles here of the mountain pine beetle. We also use this wood and take it to the mills and supply the market with timber and lumber. And that way we can offset the cost of doing the work, we can offset the cost of fighting the fires, and we're providing a product to the public.
Kern County cattlemen like Jack Lavers say though wildfires can be a perpetual problem, grazing actually minimizes risk potential.
90% of the beef industry is actually run on rangeland that is unsuitable for growing other crops. So we're growing a protein that the world needs and that we need to feed the world with on ground that otherwise would be not utilized. And with that also comes some other benefits. You have the environmental benefits that help endangered species through the grazing, and also fire prevention. We're limiting the fuel source. We just need the BLM and the Forest Service and other groups to come together and do some brush management as well. And we'd never see the catastrophic fires like we've seen in Yosemite and throughout the western United States.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Lots of selling pressure combined with lower export sales and mixed early harvest returns helped temper the grain markets this week nearly across the board. For the week, December wheat declined 3 cents, while the nearby corn contract lost a dime. The weakened dollar impact on soybeans was overcome by profit-taking late in the week to keep soybeans lower as the November contract shed 7 cents. December meal prices followed suit, dropping $1.50 per ton. In the softs, December cotton had a rough week, shedding $2.58 per hundredweight. Over in the dairy parlor, October Class 3 milk futures declined 22 cents. In the livestock sector, a tough week for beef as the October cattle contract dropped $4.60 to its lowest mark in 15 months. October feeders fell over $9, but the October lean hog contract rose $3.72. In the currency markets, the U.S. dollar index slumped nearly 0.4%. October crude eked out a nickel gain. COMEX gold bounced back after a 3-week fall, rising $34.50 per ounce. And the Goldman Sachs Commodity Index dropped nearly 7 points to settle at 357.60. Here now to lend us his insight on these and other trends is our senior market analyst, John Roach. John, welcome back.
Thanks, Mike. Nice to be here.
We are glad to have you, and this was an interesting week as we saw the Federal Reserve wait to raise interest rates yet again. We saw the dollar fall apart, and we also saw the grains drop as a whole. We've been talking for a long time about this strong dollar weighing on the grain markets, and this week we didn't get a reprieve. On the wheat market, where do you think we're headed from here?
The wheat market's struggling with the crop size in the countries of the former Soviet Union. Ukraine and Russia had big wheat crops this year, and as typical, they're selling it very rapidly, and that's just beating the market down all around the world.
Are they selling it rapidly enough that pretty soon it'll be in the rearview mirror?
I hope so. We expect that. They'll be done with their sales here in a matter of the next few months, and then from there on, then we become one of the better markets in town.
So looking out through the remainder of this fourth quarter, where do you see wheat prices headed?
I think we're probably near a low, or we've been very near the low. I don't know that we have to go back down and do much with those lows. The market really deserves to hold in here and see some firmness over time.
But you don't see this as a buying opportunity at these price levels?
Well, it may be, but in the USDA report that came out a week ago, the only world commodity that's growing in stocks is wheat. And so the fundamentals are really not that positive going forward. And so some recovery makes some sense, but from a standpoint of buying wheat to speculate on a price increase, I'm not encouraging that.
Okay, the fundamentals are just too bearish.
It just takes a while to clean this supply situation up.
Okay. Speaking of a supply situation, as we take a look at the corn market, we've got a question here from one of our Twitter followers. This is from Dale in Bloomington, Illinois, and we advise all of you who are on Twitter or Facebook, please follow Market to Market and don't hesitate to tweet a question at us. Dale is curious, how will the Chinese government ultimately dispose of or sell a part of their corn stockpile? At what price or how? We've been told for so long how they have so many bushels of corn piled up. Eventually, one surmises they'd have to get rid of them.
Well, not necessarily. I mean, the numbers it behooves China to have a big inventory. It tells all the sellers that there's plenty and we really don't need to bid up for any of your corn. It also tells the Chinese people that there's plenty of food available, and that's an important thing in that country. You don't want to send a different kind of message that you're tight on food supplies at all. And so, first of all, I question the numbers a little bit. And then secondly, I don't know that there's any real rush to do anything with that inventory. It's a food security situation. And although we hear a lot of people talking about that, we really haven't seen much happening.
So as we look at this corn market, harvest is starting or in progress in the south and moving steadily farther northward. What's your advice to producers as this corn is coming out of the field?
We think prices will be better next spring. And so the position that we've held through much of the spring when prices were cheap was that we really would like to build storage or accumulate storage some way or another. If not, maybe even sell the grain and turn around and buy it back and hold futures into spring. We think next spring we're going to be dealing with smaller stocks, which is the current forecast. We think they'll be even smaller, and we think it'll be difficult to get these number of acres planted with corn at these price levels. So we think next spring corn has to be higher in order to get the number of corn acres we're going to need to supply the growing demand.
Now, looking out at projected yields, particularly in the eastern corn belt, finding storage shouldn't be too much of a concern. In the northern and western parts of the corn belt, where there's record yield, are there concerns that storage might be tight for the growers to find this year in some parts of the country?
I think it's going to be very difficult to find in some parts of the country. But once we get this crop under wraps in some fashion, whether it had to be moved or whether it found a home in storage, we think that the market will have to recover in order to get grain to move away from farmers' hands. That's what happened last year, if we recall. We bottomed the market in September, and the corn market moved up about 80 cents a bushel, as I recall, between September low and December, and it was strictly because we had to get the inventory away from a farmer. It's one thing that we have it, it's another thing to determine the price it's going to take in order to get movement. Remember, we need record movement of corn every month in order to satisfy the demand.
And the demand you project to grow throughout this next year?
I think the demand is going to stay strong through this next year, and I think the government's been very conservative on total coarse grain demand in the world.
And on the supply side, we've heard a lot of naysayers about the USDA's various yield numbers, particularly on the corn side. Are we going to have to wait for those USDA reports to tick this yield down before the market begins to move higher?
I don't think the market moves higher until we get into the harvest, well into the harvest. And I think that's at least another 2 or 3, maybe 4 weeks away before we would expect the market to get through that initial harvest pressure. And the government's yield numbers, I mean, we're getting yield reports. We track them on our web, and they're all over the map. We have some very good yields and some very disappointing yields in fields that are adjacent to each other. So it's just very spotty, and it's very difficult to get your arms around what those yield numbers are. So this October report will be very important as far as yields are concerned.
Well, let's take a look at the soybean market. We've seen some resiliency in here around this 890 mark. At the end of the week this week, on Friday, there was a pretty heavy sell-off, 17 cents down on soybeans on the November contract. Was that technical selling, in your opinion? Do you see us bouncing back, or where are beans going from here?
I think we have to back up a little bit to last week. We saw the USDA report, which is a fundamental report, and we saw very strong performance in prices following that, led by corn. That was not because of a fundamental change that the government presented or anything of that nature. It was technical buying. We crossed up through the 20-day moving average. It gave a buy signal to a lot of technical programs. The market rallied because there was not much for sale until it finally reached a price level that there was something available for sale. And since then, we've turned back down and we've lost almost all of those gains. And so it was a technical rally in advance of harvest that was followed by a technical sell-off. So we really have not done very much here other than given farmers a great opportunity to get a few bushels sold that they need to get sold in the next 30 days. We had sell signals out this week on both corn and soybeans, and the market peaked on those sell signals and has trailed off since.
Do you still think on beans in particular, we're still a good price for farmers to be making sales, or do you advise to hold at this point?
We're back in the hold pattern. We think that the market will have good support down at the lower levels. We think that the October report will not only show some smaller yields, we think we could see smaller acreage as well. We saw reports out with the FSA report out this week, and the way we calculate the numbers, we think that the acreage number will be reduced in October a little bit. That's what the trade's looking for, so we're in line with the trade, but it potentially could be reduced even a little bit more than what the trade thinks.
Okay. Now, I do want to take the time today to talk a little bit of cotton. We saw 258 down on the cotton charts this week. This cotton market, where do you see it headed from here?
I think the market's headed down into the harvest. I mean, it's at that time of the year when you have the harvest pressure and we're not getting any positive news from a fundamental standpoint to turn it around.
Any chance we could be finding a bottom in here? Do you anticipate selling until we get finished with harvest?
I think we have to wait until we get well into the harvest before we can expect a bottom.
All right. Now, looking over at the livestock numbers, we had the cattle on feed report come out Friday. Placements were up 3%. How does that compare to what the trade was expecting?
It was smaller than what the trade expected, and that's probably the first round of positive news that livestock producers, after 6 weeks now of steady declining prices down each week, last month they decided, wait a minute, we're not going to place these numbers of cattle. As a consequence, the numbers were smaller, and that's encouraging as we go forward. The marketing's numbers, however, were right on what the trade expected, so there's no real pleasant surprise that we're further through these fed cattle. We're currently dealing with too many cattle that have been on feed for 90 days or longer. I think it's 9% more than last year, and until we get through those heavier numbers, it's difficult to get very excited about price.
And now that was another question we had sent in from one of our Twitter followers, Zach Kennedy at Kennedy Cattle Co. was curious, how much are overweight cattle pulling down this market? Is that having a substantial effect?
I think it's having a substantial effect, and it's allowing the packer to have wide margins and be able to trade cattle on Wednesday at lower price levels. So we have a market that we've got to work our way through.
Do you think with this cattle on feed report, we might be putting in at least a temporary stabilization in this market?
It's possible we made new lows today. So, okay. I mean, if we may see the market firm on that on Monday, but remember the market's trending lower, and we still have a lot of cattle to deal with. So, I'm not sure that we're ready for. I don't think today was a low.
Okay. Now let's look at the feeder cattle market, off nearly $10 this week. That's given up a substantial, I think, close to $50 in the past 4 months alone. Are we maybe getting close to a low in the feeder cattle market, or are supplies really that available?
Well, it's not a matter of how available supplies are. It's how anxious are the buyers to step up and pay the kind of money it takes and look at those kind of break-evens, and we saw them back away this last month. And so I think the feeder cattle market continues to correct until we start to see some stability in the fat cattle trade.
Given that we're coming off record high prices and there's still historically high prices in both fat and feeder cattle, would you advise producers to be selling out longer term, maybe into next spring or next year, or do you hold and see what happens?
Well, I think in general, as you said, we peaked the market some months ago and have been on a nonstop down really since then. And so where does that market bottom at? Does it bottom right in here, or it would seem to me that you have to continue to play very cautious with the cattle business. I mean, you've just got to be very careful in this kind of environment. Remember, in addition to having the issue with the too many cattle that are finished or overfinished, we also have an economy that people are getting a little nervous about.
Okay. Now, taking a break from the bearish cattle markets, let's look at this hog market, up substantially again this week. We've seen this market show incredible resiliency given larger numbers. Do you think the hog market still has room to go higher?
Thank goodness for bacon. That's about the only thing we can say that's helping the hog market. The cash market's leading the futures to the upside. We think the market can move a little bit higher, but we're going to be hedgers from here on up. We think that we've gone about far enough, and if you're looking for a spot to hedge, we think we're in the price area to begin.
Now, same question as feeder cattle. How far out would you be hedging those sales? Are you hedged well into 2016?
I think you have to take a look at the profitability on your farm operation, and I think it makes some sense to be out into through the fourth quarter into the first quarter.
Okay. Now, we talked at the start of this segment about the U.S. dollar. We saw it slump a little bit earlier this week on the Federal Reserve's news. Where, in your opinion, is this dollar headed? You mentioned the Chinese economy might be giving us some trouble. Where do you see us going from here, dollar-wise?
I think the dollar stays strong, and it stays strong really for quite a long period of time. If you look around the world, the United States economy is the one that's doing the best, and looks like it's going to continue to do better than a lot of the other world economies. So I think we just have to deal with a strong dollar for the foreseeable future.
Now, we saw the Chinese devalue their currency a little bit in the past about a month ago now. Mm-hmm. Is that done?
Well, talk around this week that maybe not. One of the things that's the scariest that I saw this week is that maybe China's on the verge here of devaluing again. That's obviously just speculation, but a 3% devaluation is nothing in comparison to what we saw happen in Europe, in Brazil, in Russia, and some other countries. I mean, 3% is nothing. 10, 15, 20% movements in currency is more likely what happens if there's going to be a big move. So that's my caution for people here looking at the Chinese right at the moment is, do they have a need to devalue even further?
Okay. Well, John Roach, thanks for taking the time to join us this week. It is always enlightening.
Thank you very much, Mike.
That wraps up this edition of Market to Market. But John and I will continue our discussion and answer some more of your questions in the Market Plus segment available on our website. You'll also find audio podcasts of this discussion as well as streaming video of the program exclusively at that Market to Market website. And you can also interact with us through Twitter and Facebook at Market to Market. Join us again next week when we'll talk with one of the major players in U.S. ethanol. So until next time, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.